For the longest time, Bitcoin and Wall Street, they were like two totally separate worlds. But then, 2026 happened, and everything changed. The biggest players in finance suddenly had a brand new way to get in on the action, and it all boiled down to one single, really powerful idea.
And I'm not talking about some small tweak here. This was a total rewrite of the rulebook. All those old walls that kept traditional finance separate from digital assets, they just crumbled. The entire investing landscape was changed, forever.
So, what did it? What was the big catalyst for this huge shift? What kind of financial tool could actually build a bridge between the old world of Wall Street and the new world of Bitcoin? Well, the answer, as we're about to see, is actually pretty simple, but wow, is it powerful.
Okay, so first, let's just rewind a bit. We need to get a picture of what the world looked like before this all went down. See, it's not that Wall Street wasn't interested in Bitcoin. They were. The problem was they couldn't easily or safely get their hands on it. There was this massive wall standing in their way.
For pretty much everyone, from regular folks to huge investment funds, trying to buy Bitcoin directly was, well, it was a total nightmare. You had to mess around with digital wallets, and then you had to protect these super complex private keys, these crazy long strings of code that are literally the only way you can access your money. And on top of that, you had to navigate the whole wild west of crypto exchanges. Make one wrong move, poof, your entire investment could just disappear, forever.
And if you think that was bad for the big institutions, it was even tougher. I mean, their whole world is built on strict compliance, risk models they've used for decades, and reporting systems that are set in stone. Trying to own Bitcoin directly, it just didn't compute. It was like trying to fit a square peg in a round hole. Their own rules flat out said no.
And then a door opened. And the solution wasn't some brand new, complicated piece of tech. Nope, it was a tool that Wall Street already knew and trusted. Something they'd been using for decades. The exchange-traded fund, the ETF.
So, what is a Bitcoin ETF exactly? It's actually beautifully simple. Think of it like this. It's a fund that owns Bitcoin, and then it sells shares of itself on regular stock exchanges, like the NASDAQ or the New York Stock Exchange. This means you can get exposure to Bitcoin's price moves using the exact same brokerage account you use to buy shares of Apple or Tesla. No new accounts, no weird tech.
And this comparison here really shows you the whole before and after story perfectly. On one side, you have that complicated, risky, headache-inducing path. On the other, a super straightforward, familiar system. The ETF basically put Bitcoin on a set of tracks that Wall Street already knew how to drive on. It just removed all the friction.
All right, so with that access problem totally solved, the real transformation could kick off. And this was so much bigger than just new money flowing into Bitcoin. This was about a fundamental shift in how the big institutions thought and behaved.
Before the ETFs came along, when institutions talked about Bitcoin, if they talked about it at all, it was mostly just hype and speculation. But in 2026, the conversation became all about strategy. Instead of panicking or getting overly excited, professionals started talking about things like position sizing. Instead of just sitting on the sidelines, they were actively trying to manage its volatility. All of a sudden, Bitcoin was just another asset in the toolbox, something to be analyzed and allocated, just like anything else.
And this chart here, it shows you exactly what that strategic approach looks like in practice. See, Bitcoin wasn't taking over the whole portfolio, not even close. It was being given a small, very deliberate seat at the table. This is what's called allocation logic. It's a calculated move, adding a small slice of a volatile asset with the hope of maybe improving the whole portfolio's performance and diversification.
A really fascinating side effect of all this was that the Bitcoin market itself started to, grow up. Because you had all this institutional money pouring through just a handful of ETFs, the daily numbers, how much money went in, how much came out, became this crystal clear signal of what the pros were thinking. That transparency made the price more efficient, and over time, it even started to tame some of that crazy extreme volatility Bitcoin was famous for.
So here's the bottom line. The entire conversation just flipped. The question stopped being, is Bitcoin just too risky? Instead, you had investment committees asking way more sophisticated questions. Questions like, hey, is this a good hedge against inflation? Or does this actually help us diversify away from stocks and bonds? Could this be a new kind of digital reserve asset? See the difference? These are strategic questions, not just wild speculation.
Okay, so that's how Wall Street's world got turned upside down. But what does all this actually mean for you? How can you take this new understanding and use it to make sense of the Bitcoin market today?
Well, now that Bitcoin is plugged into the traditional financial system, it starts to react to the same things that move stocks and bonds. This means you've got to pay attention to things like U.S. economic data, what the Federal Reserve is doing with interest rates, and of course those daily ETF flow numbers we talked about. These have become the new signals, the new things that really drive the Bitcoin market.
And really, this is the key takeaway for all of us. When you understand these new mechanics, you can start to see the why behind the price moves. It's about trading that emotional gut reaction for a clear, logical way of looking at things. And that gives you a huge advantage when you're trying to understand what's going on.
Look, if you only remember one thing from this whole explainer, make it this. The single biggest change is that, for the very first time, Bitcoin is trading inside the system. It's playing by Wall Street's rules. It's moved by Wall Street's data. It's no longer this separate thing existing completely on the outside.
And that leaves us with one last big question to chew on. For years, Bitcoin's whole identity was being an alternative to the system, but now it's a part of the system. So, what happens next? What happens when that system, the one it's now a part of, inevitably changes?